The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You've got the phone. Make the call 800 306 1990, 800 306 1990. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 42% of all mortgage transactions nationwide. They do not tell us points paid, points received, APR, just the actual locked rates. Again, consumers 42% of all mortgage transactions. Yesterday, 30-year conforming loan, 7.299, 30-year jumbo, 7.524, 30-year FHA, 7.099, 30-year USDA, 7.106, and the best loan on the market for our veterans, 30-year VA loan, 6.964. Every one of those were up yesterday. And if you want our market commentary, our forecasting daily every morning, rsrmarketminute.com, rsrmarketminute.com. We send that out. Generally we try and get it out by 6:30 or 7 o'clock West Coast time. Kind of depends on when the data comes out as to whether we can get that done at those times. But we get it out every morning. It's both emailed first, then it'll hit our socials. 10-year treasuries are down 12 basis points, 4.211. Again, as I mentioned, be careful of that. The S&P 500 up 42. Mortgage-backed securities are up 63 basis points. That's huge. That means interest rates are down so far today. Again, be very, very careful. BLS released their preliminary revisions from April 2022 to March 2023, and in total, it showed that they overstated job gains by over 300,000 people. Surprise. That means on average, they overstated job gains by 25,000 per month, or almost 9%. Remember, once a report is released, it is then revised the following 2 months, then has this preliminary revision like we got today, and then a final revision. What is a bit maddening is that initial thoughts on jobs reports could be correct, but the initially reported figure could be much stronger due to inaccuracies with things like the birth-death model. We've talked about that. It's only after the revisions that we find out the numbers were much lower, but the market does not react to it because it's in the past and only really reacts to the headline. We do see a trend of the labor market getting weaker, and we hope that September 1st jobs report is weak, as that is likely what it'll take for the Fed to stop hiking. We're seeing weakness reported in earnings calls from companies like Target, Home Depot, Lowe's, all stating the demand for big-ticket purchases are down and that the consumer is spending less. A big one to watch later today will be NVIDIA, which has been on a massive run thanks to AI. The stock market appears to be going the way of NVIDIA, and their earnings will be released shortly after the bell today. Be careful of that one. It's priced for perfection. If you don't get perfection, could be ugly. So I'm not saying what to do. I'm not a financial advisor. I'm just saying if you've got a good stomach, that might be a good place to be. If you've got a weak stomach, be careful. New home sales measures signed contracts on new homes rose 4.4% in July to a 714,000 unit annualized pace, which was better than expected and 1,000 away from the best number in 15 months. Sales are now up almost 32% year over year. There are 437,000 new homes for sale at the end of June. And at the current pace of sales, there's a 7.3 month supply, which is down from 7.4. However, only 75,000 are completed. And when looking at the pace of sales versus homes that are completed, that's the available supply. There's only a 1.3 month supply. A lot of demand for new homes as builders are selling air. 164,000 of the homes sold were not even started. Median price was reported at 436,000. Why are the builders' homes selling so well? Well, they're doing something we've been talking to you about for years and years and years. But right now we've been talking about even more strenuously lately. And I think I shared a little bit yesterday about a $2.4 million home they're going through all these price reductions. Yet that doesn't help anybody with affordability. Had they looked at some of the numbers that we put out all the time, they would have been dealing with a 5.875% interest rate, 30 years fixed, 6.54 APR for the bean counters that are watching, right? And they wouldn't have been taking all these markdowns. They could have used that money to help with affordability. Got to talk to our friends at Geneva Financial about that one. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You make the call, 800-306-1990, 800-306-1990.